What's my 2021 resolution? To make a world where everyone can win in the stock market. So what is going to happen in 2021? The meta is very bullish right now. Everything's been going up. There's been a little bit of hiccups at the beginning of 2021. But I think there's four key things that people really have to keep an eye out on. First off, cryptocurrency is real, and it's going to get into your headspace soon. Bitcoin's already at 30,000. Once it broke 20,000, resistance was gone, and resistance to Bitcoin was futile. It's going to keep on going up. The question is what you do about it. At this point, you're pretty much either going to be part of the FOMO, that doesn't turn out well for those who had the FOMO. Then there's the hodlers who are looking more long-term and probably come into 2021 with crypto. Be aware that it's going to take up your headspace. I'm not saying it's good or bad, but it'll probably take over the narrative as we go further into 2021. The second thing that you really have to be aware of is the fact that the stock market is a little overvalued. Now, to put some objectivity over that, I use something called the Buffett indicator. I've been using the Buffett indicator for years, and it is really helpful in giving you an overall perspective of the market. It's a very basic metric. It just wonders where we're at in terms of total market cap versus the total GDP of the U.S. economy. And right now, the market cap of the stock market is way much higher than it historically has been versus GDP. Now, it may happen that this is the new norm, that the stock market doesn't care. It thinks that GDP growth and economic growth is far faster than it has been in the past, and that's a real debate. But regardless of that, prices are high, objectively. You really need to keep an eye out on this and be wary of this. In terms of strategy, try not to go into anything too risky unless you really believe in that investment. Be aware of the fact that there could be a heavy turn back or a stall because of basic economics. You can't value the stock market at anything, and it comes to the point where it's much higher than it really should be in terms of the total GDP output of the United States. So the other thing you have to think about, besides the fact that the market is super overvalued, is the fact that we've added a lot of debt to our government. We probably needed it. COVID-19 has really brought about a different time where we really need that kind of influx of capital back into Americans' hands. But debt's debt, and the consequence of that is that when you get more and more debt, it's hard for the Federal Reserve to really continue stimulating the economy like they did in the past with low interest rates. Long story short, what they do is tied into the debt. They're buying and selling debt to keep interest rates at a certain controlled amount. So with more debt, there's less control that they have to control interest rates. Hence, that's why in late 2019, the Federal Reserve has been active about talking about stimulus, but then at the same time controlling spending. It's a big mess, and it could be a big risk for the stock market. Now, fourth and finally is tech stocks. There's a big dilemma with tech stocks right now. They're very, very highly valued, but at the same token, they're what's driving progress and innovation in our economy right now. So to say, you should stay away from tech stocks because they're overvalued, really you need to look deeper into them further. Tech stocks could be the downfall of the stock market in 2021, but as a retail investor, you need to look at each individual stock and see which company is the one to continue with past 2021 into 2022 and so forth. Those long-term bets in these companies, those decisions, it's time to be made. We've had the luxury of the same FANG stocks for 10 to 20 years. However, there's new innovation occurring. There's new players in the field, and the current tech stocks are getting inundated with problems. They have antitrust issues. They have Google unionizing their programmers. There's just a lot of pressure against them. And even though we're all using their software right now, we were using different software in 1999, and then it changed right after that. And now the companies we use today, those are the ones that really excelled. So looking at new innovation is key. It's now is the time. A lot of these tech companies are becoming kind of fossils, and you need to go out there and see what is really still innovating out there to keep your portfolio safe. This is the Investment Meta. My name is Chassa Johnson. I'm the co-founder of Stockteamup.com and the Stock Boss app. Thanks for watching, and please subscribe.